Ed, what do you think? We're thinking a quarter basis point at this point would be the first cut in 11 years, but the market's already thinking what comes next, right?
Yeah, and I mean, I think, this is one or two in insurance cuts and done rather than the beginning of a big easing cycle. I know the market is expecting more, but I think that's a probability-weighted average of, 70%, this is a couple of insurance cuts and we don't go into a recession. 30%, the Fed is behind the curve and, this is eventually going to result in a recession and a big easing cycle.
So what's the market's reaction if we get a 25 basis point cut today and Powell sounds like he's going to be waiting and seeing what happens next?
Yeah, I mean, I think that's what's expected, and that's been well telegraphed. So I don't expect too big a market reaction. Of course, stocks are up right now in anticipation, but it could be a situation of buy the rumor and sell the news.
And what do you think about that, Shawn?
I don't disagree with that. I actually think pretty widely expected at this point. You get 25 basis points, especially after you've seen some of the recent data. You saw a rebound in consumer spending in the second quarter, 2.9% contribution to GDP. You also saw the consumer confidence number come in strong yesterday. So I think that limits the case for a 50 basis point cut. But at the same time, dovish surprises from the Fed are twice as likely as hawkish surprises. So there is a chance they go 50 basis points, even though it's a smaller chance.
If they did go 50 basis points, would you look at that and say, fantastic, this is good news, it's going to be much easier to come? Or would you look at that and say, uh-oh, what do they see that we don't know about?
I guess it depends on how they follow up in the messaging during the press conference. If they send a overly dovish message that kind of frightens the markets, then maybe it wouldn't be so great for the markets.
Yesterday we actually talked about whether people still worry that they'd say, oh, my God, what do they know? And we decided no thinks they have any idea anymore about what's happening. So that's we know they don't know. Right. So they're making all these decisions without knowing. But at least we know now there's nothing to fear because they really have no idea.
The man behind the curtain is kind of missing.
Right. Do you remember that yesterday, Circle? We had guys on it that they said that, experts said that, yeah, we don't, no, we wouldn't think that about the Fed. Because
is that because they're reversing what they did in December?
It's just so lagging. They're always rear view mirror stuff. They have no ability to. All right, remember Bernanke and the housing crisis?
If we don't care about what the Fed's going to do or think that they know anything else, let's talk about earnings and what we've been seeing from that. And, Ed, the earnings have been pretty strong overall.
Yeah, so it's, turning out to be a very good earnings season. The earnings surprise
relative to expectations.
Yeah, the earnings surprise factor is larger than usual, and the percentage of companies that are beating is larger than usual. Of course, earnings have really slowed to a crawl here in terms of the year-over-year numbers for Q2 and Q3, but that's really based on the tough comparisons that we saw last year because of the corporate tax cuts. So if the economic expansion is sustained as we expect, then profit growth should perk up in Q4, and I think the markets are sort of looking through the valley here.
Shawn, the other big thing that happened this morning is the trade talks with China seem to have wrapped up. It looks like the American delegation is on their way back. So far, no big announcements or any huge moves, but also it looks like things are relatively cordial. So how does the market factor that in?
I honestly don't think the market cares that much right now, just as long as things stay at kind of a stalemate. I think we can kind of accept the situation we have right now as long as tariffs don't increase or we don't hear that they're expected to increase immediately. I think the market can kind of look past it for now. But I think, maybe in November, later in the year, that things start to bubble up again. I mean, a lot of these things, like with the EU, have been delayed for a while, but that doesn't mean they won't come back to the table. I personally think they might want to kind of, be a little bit careful with the trade talks heading into the election. I think you want the stock market to be strong.
Who needs to be a little careful? Do you mean the administration the U.S. administration needs to be careful with that?
I think they may want to be a little bit careful with the trade talks in the sense that they may not want to escalate trade tensions heading into the election.
Just because you want to keep the stock market and the economy kind of humming along? And the other thing we're looking for today is going to be the ADP number that hits at 8:15. I think the expectations are for a private sector job growth of 150,000. That's a precursor of what we can expect on Friday, too.
Mm-hmm. So, I mean, the labor market has really been a source of strength, for the U.S. economy. And, I expect that should continue, right? The unemployment rate is low in initial unemployment claims. And we can see the impact of a strong labor market on consumption. We had this GDP report where consumption was above 4%. So we think that continues.
So even though we're near highs, would you be telling people still to buy here?
So we're neutral right now on equities. We're looking for an opportunity to add exposure here. I'd like to be able to do that on a pullback. We think that that's something that we could get over the next
pullback of 5% or more.
Let's say 5%. I really don't think it's going to be anything more than that. But the macro conditions are very good for equities, with growth hanging in there and markets knowing that the Fed has its back.
Sean, how about you?
Sean, you saw that. You saw that these guys are headed back, right? Lighthizer and Mnuchin.
Yes.
Yeah.
You saw Trump recently, the president saying, they want to make a deal, but maybe they're not going to make a deal until after the election.
Right.
So why wouldn't you?
Why wouldn't you make a deal?
No.
Why
if you were
would you?
China,
Right.
why wouldn't you
Wait
turn
till
the
the
screws on? There was a debate last night. I mean, they were right in the middle of the season. If you were China, you might do that, and they could affect the election. It was Russia last time that did the election.
I don't disagree.
But this time, it'd be China influenced. China.
I mean, I guess it depends on how much pain they're feeling internally, right? I mean, I don't really have the
manufacturing's
best
still
view,
shrinking, but not as much. Things are a little bit better.
I think you could certainly make the case that they could try and wait it out.
I mean, if they really want to play hardball, and if they are mad at Trump, I mean, that's just something to think about, right? Because when Xi's next election, that's right.